Hi guys. Hello. Mic test. Can you hear me? All right. Hi, good evening. Thank you for tuning in. Um, I have a good example for a bad market and bad set like failed setup, and this is unavoidable and it's normal. All of the strategy has their weakness and unpreventable, we don't know. Actually, we don't know. Trading, we really don't know. Even though we have a good strategy, all strategy strategies has their uh, weakness. And I have one example here. And if you are good enough to uh, notice that weakness, you won't be entering the market. And I think most of you will easily figure that out. Uh, and I will okay, we'll talk about weakness first. So I have an entry now. Actually, I have two entry, and I locked my one combine. I opened a combine today. It's 150k, 150k combine because the one that I'm trading yesterday, the Express funded account, I hand it over to my friend. So it's his now. So I passed that for him, and then I told him that to take good care of that combine. It's a way of helping him. Um, so I used that yesterday, and I think I lost 175. And then I traded this morning. We have a good market this morning, and with that, guess what? With that 50k Express funded account, we have a staggering profit of almost 10,000, like 9,800. And I handed over to him. I told him to take care of that, and then he said he'll give me something for that. And I told him to trade only micros. So uh, I the reason I I have him I she actually he gave like 2 weeks ago he gave me a 50k account, and he said, can you pass this account for me? And then I blowed I blowed the combine within an hour while I'm on live. And then he was mad, and I told him, okay, I will pay for that, and then I will hand it over to you once it is expressed and has a positive balance. So, yep, we have a very good trending market this morning, and I will show you. This market is. I'm really hoping for a bad market today so that I can show you. Uh, we already have a bad market here, and I, I hit my stop loss. So I can prevent that because I'm following strictly. I'm following rules, exit rules strictly. And when the price was here, uh, it was here. I can exit here because that's my rule. So if I exit here, I'm not losing 1,000 because I have an exit rules. But I did not follow that because first, uh, it's a bad market, and then I already have like I traded once a while ago. You see, this is my one trade, and I have 4,500. So over 50% of the target take profit. So yeah, I have this one. I copy trade. I use this. I use the 50k express and copy trade this account. So one trade is 4,536, and I use actually I think three. Initially one, and then I add another two because I'm confident of the. Oh no, I used three in one, three position in one trade, I think. Let me see. Oh, here. I initially use five, and then add. Okay, and then add, and I have like this, and I have it within like maybe less than R, and then I lock my account because I lost 1,000 here. So it it's fine. 150K. I will be using this. I opened this one for the purpose of doing live, and I'll be using this for the rest of the live that I will be doing. Um, if I'll pass this, I will use it also as a live account. And then I open another one, and this one here is because I don't want to trade like I don't want to trade. I just open it because I don't want to trade practice account. I don't want to waste my time trading practice account. I can practice using this one. So my tolerance for the stop loss is only 400. So if I hit this one, I will lock this account, and then I'll trade tomorrow. Okay, 400 is my maximum loss that I can tolerate for a 50K, but for 150K, 1,000 at least. 1,000 to trade. So that's my rules. If I lost twice, I will stop trading. And then if I hit more than 10,000 in one day, I will stop trading for the rest of the week. So yep, um, just to keep me consistent, and then most likely I will trade using combine or a practice account if I have time. So that's what I do. Uh, sometimes sometimes actually trading is addicting if you will not notice it. Like you trade because you're bored. Please avoid that. I don't know if you've been to that situation before that once you are liquidated, if you feel like you are depressed, you want to trade, and you're not happy if you cannot trade. So it's same like it's like addiction actually, especially when you are starting, when you are a beginner or you are you just recently trade and you're hoping that you will pass your funded account or you will have a payout. You're hoping fast, but so if you are new, trading is this is the hardest easy money that you can have. It's the hardest easy money that you can have, and it's depressing if you don't have a strategy and you're just jumping in and trading without a strategy, without a risk management, without a game plan. Uh, Please don't do that. Try demo account first before before investing. So if you are not doing well with your demo account, please don't trade. Don't trade real money. It is not good feelings if you lost a lot. I lost a lot during my early days on forex. So let me open my trading view. If I still have trading view. I have I made a script on TradingView, but I don't know the the TradingView keep on blocking my script. I don't know why. But I have a script that you don't need to. This is the script I have. They keep on blocking it. This is strategy. I'm not sharing this yet. This is for a long-term trader like swing trader. This is AMA crossover strategy with stop loss and TP with RSI and moving average 21 confluence. And this is the one we're using right now. And I I have a lot actually, but they blocked this one. I don't know why. But this is strategies soon I will share it to you. This one is better than the one we're using now. I will share this and I will very soon, maybe after 3 months. I'm still finishing the you know the course that I'm doing, and I will share it to you very soon. Okay, let's go. Okay, I'm on trade of 8. So I have 100K account on this trade of 8. Let's see. Let's go to Nasdaq. So I want to show you first the trade that I have earlier, and it's a fantastic trade. So this I used my trade of 8 account, and we'll talk about this because I want to explain to you the optimum entry after maybe before after 9. We will have I will spend 20 minutes explaining optimum entry, but right now uh, I want to explain this first. So let me explain it to you. Uh, let's see. O- Okay. All right. So market opens here. This is our market opening. Market open. So market open here, and we have this new day, new NDOG, new day opening gap. So if the price is uh, I don't know if you this is a good thing if the price will open on the opens with the gap. Actually, you always have a gap, and then the price is not moving away from the gap. Expect that the price will fill the market will fill the gap like what we have right now. So uh, while we are on the pre-range or the while we are on the pre-market opening range, we are hovering around this new day opening gap. And I like if the market will do this because it's easy to spot the consolidation or like consolidation or the weakness of a strategy. So you already know how to. So if you are new traders, you need to learn how to identify consolidation, manipulation, and distribution. So once you identify that three, actually there is five, but that three is the most important. Once you have like a skills to identify that three, you have a chance of uh, catching a good market or entering into a good market. So like for example, let's not use this indicator. So right now we have a gap and the price didn't go far away from that gap and the price started to fill the gap. So now the market is successfully like fill the gap because sometimes if the price will go for far away from this gap, for example, the price like reach this area, I also like that's a hard decision for me because even though if I will see a good trend, I'm afraid that the market will try to fill this gap if they will just like hovering around this area. Most likely, this is the area where I put my take profit. The same goes if the price will be here, so I will buy and maybe my take profit will be here. So you will have a dilemma on if you're about your bias, but since we're using this strategy, we can eliminate that confusion because we're following strictly the moving averages. So the moving average will tell our bias will tell will give us an entry, and then now the price start to so we have this we have this consolidation, and then all of a sudden we have manipulation. So it's confusing, right? So this is what I've told. This is one of the weakness of this strategy. And sometimes You will get confused. So if you add if you add a global trend analysis on this, and when you go to 15 minutes, actually we don't need to add. When you go to 15 minutes, and the price is like this. See, we are in consolidation, and then if like this, so you will be confused because you don't know. You are on the middle of the premium and discount zone. So this is a hard market actually. So you are in the okay. So you are on the equilibrium on a 15 minutes time frame. So the price start and then drop. There's a resistance here. So there's a support here. That's the resistance where the price starts to drop. And we are on the equilibrium. And this is hardest part when the price is here. You don't know your bias because you are in equilibrium. So price will may go up and may go down because you are in the price is not that expensive, the market is not that expensive, and it's not that cheap. Unlike if the price if the market is like for example still here, so my bias is to buy because we're still on the premium, and if it's here like for example this one here, uh, like considering if the market like for example if the price is here, so the price is here. You are on the zone of the premium, so it will help you decide if you sell or not. So by this time, like okay, I will sell, but at this point, you don't know, where the price go. But of course, we're using this again. We're using moving average. Will tell us what to do, but it will be a risky and maybe we don't know we are on the weakness now. Like now, let's go to that weakness. Uh, and then we'll try it on the, let's try it on the trading view here. Okay, try on the trading view so that I can replay the market. We're here, right? So we open, the market opens here, and then pre-range, right? This is where we'll start hand a setup, and then supposedly we're not trading. I'm not trading. That's my rule. I don't know about you, but that's my rules. I don't trade before 7:30 p.m. But I did trade here before 7:30 p.m. because I'm really hoping that the market is bad. But I'm not hoping that I will lose. Like I will hit my liquidity, or I'm not hoping for that. So we'll stop again. Am I stop? Yeah. I think did I hit my? No, not yet. So I'm not hoping that I will, I will hit my, because I thought this move here is a real one. So that's why this is so from consolidation. But if I did follow my rules not to trade before 7:30, I won't be losing that 1,000 here. But I just no, I can't help it. I was tempted because it is a move. So from consolidation, we have that manipulation. So I know exactly that that is manipulation, but I'm not expecting that the manipulation will stop here. I was thinking that uh, at least we'll hit the 20,250, because 250 is a psychological number. But psychological number is not always, it's not always reliable. But I was hoping that okay, this is manipulation and the price will at least once the pre-opening range will reach pre-opening range. I was hoping that I will have this area here because of this manipulation, and then after that I'm expecting that the price will either continue to go down or continue consolidate here, or then continue to go down for a distribution, or consolidate here, and then go up for distribution. So that's what I'm expecting. But what happened is we have that here, and then market shift happens here. Actually, here, this is the real market shift, and then we have this fair value gap, bearish fair value gap, and I was here. I did not I did not enter this area here because there's another fair value gap with the volume imbalance. So this is the volume imbalance, and there are a lot of volume imbalance, volume imbalance, and hmm, wait, wait, hey, Kate, you're this, yeah. So we have a volume imbalance, like a multiple volume imbalance on the low volume market. There's a lot of volume imbalance here inside fair value gap, and this volume imbalance is stronger than fair value gap. Price filled that gap, price filled that volume imbalance, and instead of going down, continue to go up. So that's what happened. Let's see. And I entered here. This is my entry on this volume imbalance, and I put my stop loss there actually. And I entered here. I was mitigated here. Put my stop loss there, and I was hoping this one here. And then price start to displace. And then I saw my exit, like my exit my exit option B here, but I did not follow the exit option B. And you know why I said okay, maybe the price will try to fill this one here. I will fill this gap here, and then this volume imbalance here, and the gap will. Uh, so I will exit this entry, uh, and the gap will. I mean fair value gap will try to stop the price, but there are another volume imbalance on the top, and then the price is market is attracted. That's like a magnet, so the price fill that gap and then continue to go up. But of course, that is a theory. It's a theoretical. It's a theory of price action. So um, or market structure. It's not really reliable, but almost most often than not, that what will happen, especially on a market like this. There are a lot of volume imbalance because we're on a low volume market. And then I hit my stop loss there. So this is an example of bad setup. An example of bad setup because we are on the equilibrium of 15 minutes time frame, and there's a lot of traders who are undecided. So buy and seller are fighting to push to sell the market and to buy the market. So the Asia traders, retail traders are like they are fighting, and no one is winning right now because we're still on the zone of consolidation. If you go to 5 minutes time frame, we are still on consolidation. So uh, we don't have a real move right now. So this is an example of a bad market. Right now, we have a bad market at this time. At this time. So this is an example of bad market. And if you are, better not to trade by now. If I were you. Uh, so now I tried twice already. First is that one from my other account, which I manually lock it because I lost 1,000, and I'm still positive 3,523. That's good. I think I will not I'll not pass this fast because I can pass this within 2 days if I want to. I want to use this as a live live account market. I will not try to pass it. So most likely I try to use, let's use micro every time we're doing live so that we have a good account, and we will use this for long. And then the 50, I'll pass this week, and then I'll add this to my account. This will be my, I think my sixth. If I pass this 50K, this will be my sixth account, express funded account. Uh, and I don't trade for real during Asia session, and I only trade for my express funded account during uh, New York, New York and London. And I cannot do live if I'm trading seriously because I don't know why. So that's why I choose this Asia to share my strategy because it's a slow market, so we have more time to discuss things. So right now, let's go back to 1 minute. So this still, we are still on consolidation. So you will end up losing if you trade by now on any strategy that you're using. And this is our real, I think this is our real for now. Starting, starting, well, Asia is open already. So from Asia opening, this is our consolidation, and this is a not non-tradable consolidation. There's no way you can have a good profit here. So it's better not to trade by this time unless we will see some displacement uh, over there, and that displacement most likely will just hit this resistance here. So if we displace here, if the price will not pull back to this area, don't enter the market, or it's up to you, it's your call. But if we have displacement, the price will go down. If the price will not retest this area, I will not enter the market. But if the price will, if the market will succeed to uh, break this area, I will not I will not like wait for a pullback. Maybe I will enter one, and then one position, if there's a pullback, and then I will enter again, because this is a strong resistance tested many times. One, yeah, just one still, but this is a strong resistance on this level. So yeah, so that's an uh, example of the what you call that, example of a bad market. Khalid Hamdi. Hi, this is not an ICT, but some of my terminologies may be same as ICT because I learned trading. I learned price action through ICT, but ICT ICT is, I don't know, maybe for me, but I tried ICT for years and I'm not profitable enough. So this is a simple moving averages and super trend. Uh, it's a basic strategy that you only need to know. Is the basic that you already, maybe probably you already know, like support and resistance, moving averages, trend line. So if you know those basic and simple trading methodology or concept, you can use this strategy perfectly. So if you know support and resistance, trend line, uh, basic candle pattern or Japanese candle like reversal pattern, if you know those things, you're good to use this one. Yep, you're good to use this. This is Nasdaq, and but you can use this to any major forex trading, major forex pairs. You can use it. Okay, so I'm seeing a good. So let's see. We'll wait until 9 p.m. Until 9 p.m. After 9 p.m. I'm done. But if I have an entry now, so okay. Right now we cross. So step number one, we have a cross. Let's see, we'll try to trade this one. Maybe we have a good range here. So we have a cross of moving average. So I already explained to you one of the weakness of this strategy. And the other weakness of this strategy, of course, is the user. If you're emotional, yeah, we are the weakness. Let's try to trade this one because we are not risking a lot actually. So we did not displace yet. We have a fair value gap. We have a gap, inefficiency gap. And that's the number one. We we don't have a good displacement yet, but I will consider this a displacement. This one here, although small, let's consider that a displacement. And we have the shift of the super trend to bearish. So we have the three already. Now, okay, we have, I think this is a displacement. Okay, we are displacing right now to this consolidation. Perfect. So we displace. Okay, we displace. And it's already late to enter now. Wait for the price to go back here. So this is our high probability fair value gap. So usually, if this failed to displace like this, I will consider this a fair value gap. But this is the fair value gap that left by this displacement. So this is our high probability fair value gap. So this is the one we will use. And let's target 1:2. Okay, this is a small volume. So I'll try to put my stop loss here. Now we'll mark limit sell 2. And then our stop loss should be here on this level here if the price will go back there. Okay, so now we break this consolidation and we have a minor market shift on this area. Let's see if this trade will work. If not, okay, now we're in. We are risking, we'll give a room 350. Wait. I will close my. Uh, let's head because okay. And if we fail this entry, we're really on a bad market. So I'm still want this 200. I'm still attracted to this level actually tonight. So we nullify this. Let's see if this fair value gap with the volume imbalance will okay like that. Okay. Let's try that. And this is if we fail this one, so this is a confirmed bad market. It's been a bad market. It's a bad market actually, but let's see. Now we're here and then we fill that gap. Let's give more room. We fill the gap again. Look at that. And then we switch. Just switch. I'll keep this trade. I'll keep this trade. Uh, let's keep this trade. 1,000 until I lost 1,000. So if you're following the exit option, by now you should be exiting this trade. You should be out of the trade right now. So You see, uh, the price always feel that. It's been keep on feeling like one every time that we have volume imbalance, the price will try to fill that and then either will go up or go down. So still, this is a consolidation, and this is not a good not a good market structure to trade using our strategy. So we are keep on switching super trend, and that's an evidence of bad market. But if you have a market, al- although although it's consolidation, but the super trend is keeping one bias, that consolidation is good considering it's a wide wide consolidation. So this is our exit number one. That's an exit number one. So you should supposed to end your trade and minimize your exit B, I mean. So once you have that, if you don't want to lose or risk more, just exit the trade and wait for a good setup. That's all. So you minimize your loss, and then you minimize your risk. That's how you apply the uh, five exit option. You see, uh, the super trend switch, but the moving average 9 and exponential moving average 21 haven't crossed yet, have not crossed yet. So uh, I can still hope that the super trend will switch, but I think it's no, it's so what the time now? So at 8:39, you will see maybe a true move after 9, but I'm not expecting the market will do good tonight compared to the last 3 days ago, last three nights on Asia, because we have that good movement earlier. So 693. So let's stop trading. So I will end this because I want to try. I will try to pass this uh, this week. So I don't want to risk more. Okay, think so. That's okay. Okay. So still we don't have. So this is so now I get what I wish. This is a bad market. I was hoping for a bad market, and the market is bad. Okay. So that's an exit option. B. The exit option A is when you have your 1 is to 2 take profit. And yep, that's an exit option A. The B is when this moving average 9 cross the smooth moving average 10. And that is to minimize the purpose that I put that there is because we're scalping and we don't know the price is unpredictable. So the purpose of that is to prevent your stop loss by being hit or to minimize your loss. So right now I'm done, and I don't want to lock this combine because I want to I'll trade later at London time, London opening. So we don't have a good market. Although our consolidation is forming, getting wider, so let's see. So we keep on bouncing at this level here. Unless I will see the, I'll see the market do this. What like I'll see the price will after bouncing that if the price will fail to displace this area here and go down here and go back again, and then this is if this is the range, it's a good range to scalp small profit if that's the range. All right, okay. So now we're done with this. I think I already explained to you the bad market. I don't know. Hello. I hope you already understand the bad market that I'm trying to explain. So this is one of the weakness of this strategy. So if you see this consolidation, if you see this pictures of the market, avoid trading using these strategies, or I think avoid trading because you will not get anything from this. And you see, I tried already. Supposed to be I can only like I just want if I lost twice and that's it. Because if I lost twice, meaning I don't have a setup, no setup because I will stop trading. And my Asia session only I only trade between 7:30 p.m. to 9:30 p.m. And if I don't have a setup on on that time period, most likely we will not have a setup for the rest of the night unless you wait until London opening, which is 3 a.m. Eastern Standard Time. All right. Okay. So bad market. Now let's recap. I already explained to you the bad market. We have, if you have that consolidation and failed setup, and there's multiple factors why we have this failed setup and we have this bad market, and one of that is because of the traders they are undecided if they want to sell. So most likely this is consolidation or algorithmic movement. No one's really trying to move the market, and that's one of the reason. Second reason is because we are on the premium and we are on the equilibrium, so we really don't know where the price will go right now on a 15 minutes time frame. So if you want to speculate or try to guess, this is the best guess because you are supported by the premium and discount. And we're talking about stocks here because this is a futures. This is a and this is Nasdaq. It's a combination of multiple stocks. And this is not a forex where price is less manipulated and yeah, less manipulated. This is a stock market where it's easily manipulated by hedge funds like that, smart money, or yeah. So that's why if you have this one, uh, it's a basic analysis that people will buy stocks when the stock price is cheap, and people will sell stocks when the price is expensive or premium. So it's the same because this is a combination of multiple stocks, Nasdaq. So that's the idea. So that's the reason why we have a bad market because we are hovering around the equilibrium on 15 minutes time frame. And if we talk about 15 minutes time frame, that is uh, it's Asia, of course, but sometimes people buy stocks on Asia. Sometimes they trade big during Asia. And let's see the news if something that so we don't have a good news. Let's wait for this one. It's about to there. Maybe this one will move the market. So it's done because it's a Japanese market. Let's go back. We use move all the drawings. So didn't do much because it's not a high impact and we are still on the consolidation. So okay, so that's the one of the weakness of this strategy is consolidation. If you have a consolidation, don't trade. Uh, the the price action on the market structure may trick you, like what we have right down right here. We have a displacement, we have a perfect setup, but we lost the trade. It's because the market structure form new consolidation. So that's what happened. It is what it is, and that's how uh, trading works. You will not a winner all the time. Okay, now let's review. Let's let's talk about before I'll end this. I have 30 minutes still. I don't think so. We will have a good entry tonight, so we will stop trading. It's Wednesday. I hate Wednesday. Now, let's go. Let's go to let's review the trade that I have today or the market today, and I will explain to you the optimum entry. Actually, I posted a video about optimum entry, and I think this is a good time that I will explain it to you because I have a lot of optimum entry for today session. Um, okay, yeah. So yeah, but I have another indicator for swing trader. Just a minute. Hey kid. Mm, mm. Go to mama. Go, go. Go to mama. Go. All right, sorry for that, my kids. So I have another strategy. I have another strategy for a swing trade, but I'm not sharing it yet. Maybe soon. So yep. Um, Let me see. Or I can explain it to you privately if I have time. Okay. Now what happened to the market? So we still, let's see this. We have a displacement. Let's see. Uh, we displaced this area here. Should I enter the market? Let's see. Let's try it. Let's try this. Let's try this market. Hmm. And I will be using. So that news moves this market a little. Yeah, it moves the market a little. I don't know why. Actually, I don't want to trade. It's okay. I will use practice. I don't want to trade because I need I need this later at 9. I'll pass this later at this London time. So let's use. I don't have a practice. Practice. It's okay. So we'll not trade that one. We will paper trade then. So I'm done. I lost 3 times already, and I don't wanna. It's $50. It's still money. So let's see if we have 1:2 here, like for example, like that on this optimum entry, like that. Okay, it's far, right? Let's give 1:4, 1:3. Okay, so I'll go to trading view. If you're still there, I will explain to you the optimum entry and how to catch a good trending market. We'll start at New York AM. Uh, that gives me a break. This gives me a break for a week. So next week I won't be trading because I earn a lot today. So the market opens at 9:30. So market opens at 9:30. This is the price. This is the market earlier. So this is a quick explanation. You will get it in no time. This is New York opening AM. I don't know. Okay. So this is the market earlier. So again, I don't trade before 9:30 p.m. And if I trade London, I will stop trading at 5 a.m. So I don't trade 5 a.m. to 9:30. So this is the market earlier. Then all of a sudden we have this move. Okay, and uh, we have a brief bad market. You see, this is a high volume consolidation, and this is not tradable unless you will go to 15 seconds. And even though you will go to 15 seconds, it's still non-tradable because as you can see how the market, how the price action. There's no way that I will advise you to enter this market. There's no way. I mean, you will end up losing. And if we try to trade this market, like for example, you go down to 15 seconds because it's a high volume. And then you see this. This is a good setup. You draw your, so you are buying. Signals give you everything and tells you to buy, and then you buy. And you are risking how much? 290. And then you're trying to hit, we'll say, most likely you will have 1:2, but let's see. You see what happened? And because I'll explain to you why, and then it's consolidation. Another bad market, and the reason for that, it's so easy to know because I'll draw it to you. We have a news. There's a news. They're waiting for the news. I think 9:40. I forgot that news. What is that news? And that's why you don't trade if there is a news. Today is 24, right? 23. Yeah, we have a news earlier. It's a big impact. So that's the reason why the market is performing this like that. So let that news pass, and the best thing you can do is to wait for the 10 a.m. to trade the silver bullet, and then 10 a.m. this what this the market gives you. So now we are on a 1 minute time frame. We are like the super trend support bear, and then we cross multiple time, and now we have a displacement here. Displacement and then displacement. Okay, so the price will be so. If you are trading this session, you should act fast and you should decide fast because this is a fast market, and sometimes you don't have a chance to decide quickly. So you need to be. That's why I'm not doing. I don't do live this time because I'm always my focus is like 100%, and I want to catch the trend. So this is where I start trading. So when I have this displacement, I went down to 15 seconds. I have that displacement. I went down to 15 seconds, and this is what I saw. After I went to 15 seconds, this is what I saw. I have a good displacement on 15 seconds because this candle closed here, and and the market shape is way. It's on more than like 70% or 60% of the this displaced candle, and this is where I enter. Uh, this is where I enter, and actually I risk like 530. Yeah, right. I risk 530 on this trade, and then I hope that the market will trend down early on this first move. Then this what happened on my trade. Uh, so yep, I escalate my. That's what I did earlier. And then this what happens. There was this cross earlier, so I exit because that's my first exit option. Once I'm trending down and this will happen, definitely I will exit. And the same goes if it happens here, I will exit early so that I can minimize my my loss or my stop loss. That's what I'm. That's the purpose of the exit option. So I exit here, and then uh, I know that the market is still. Uh, I know that the market is still not doing well by this time. I said, okay, I think uh, we'll start to we'll start to reverse. So that's what happened earlier. Now this is an optimum entry, but it's not the optimum entry that we usually do, where we put our entry on the 50% of the fair value gap, right? With that's not the optimum entry. So if you go to 1 minute time frame, 1 minute time frame, we have a fair value gap here on this displaced candle, and as you can see, if you because this is high volume, if you are using 1 minute time frame, you will left out by the market because uh, they did not mitigate this fair value gap. And if you put your entry here on the 50% as an optimum entry, definitely you will not ride this market. But if you go down to 15 seconds or even 30 seconds, 30 seconds also give a clear view still. But if you go down to 15 seconds, because it's high volume, you cannot do this on what you call that, on Asia market, because we don't have enough volume to go to 15 minutes. So uh, this is not the fair value gap of a 15 minutes 15 seconds time frame, because it's not caused by the displacement. So this is our fair value gap. This is what I consider fair value gap on this time frame, and that's why I was able to enter this. Here it's where I enter the market on this. So this is one example of optimum market on a fast optimum entry on the fast market. So that's your entry. Um, there's a thing you can do. For example, uh, you're not confident that if you enter here, maybe you will have a dilemma that, okay, maybe the price will still hit that, and then and if I am not if I will not enter the market now, maybe I will left alone. So what you can do is, if you don't want to risk a lot, use micro. Either enter four position on micro here, and then once the price will try to retest this, you can enter again and just put your stop loss here. And if you're using micro, maybe you're not risking more than 400 on this entry with the position of like 8 or 5. Or if you're using mini, okay, use one position entering here and put your limit order here to sell if you are hoping that the price will try to retest, so that you will have another optimum entry. So usually that's what I do, uh, because I want to catch this trend market. And this picture of this market structure is always it always happened during New York time, New York session, New York AM. You will see a lot of like this, because this is institutional trade and hedge funds trade. Unlike there's a two picture actually. One is the usual that we're doing, like for example the one we have here. Let me see. Sometimes you will have a very nice picture of like we'll create fair value gap, and we retest that value gap, then we'll go up again, create again another fair value gap, and we'll go up again. That's a good market. But sometimes if you have this market, this is a fast market, and it happens within 5 minutes or within, yeah. So you see, it happens within 5 minutes, and you don't have a chance. So you should be like focusing while you are in 1 minute time, like for example, while you're in the 1 minute time frame, and you already have the signals to sell. The strategy tells us to sell, and once you have a displacement candle like this, immediately go to 15 seconds. Don't wait for anything. Go to 15 seconds and you will see an entry. 15, 30 seconds. So, but for me, because high volume, I'll go directly to 15 seconds. And once I see this, I will sell. Then I'll put my stop loss there. The reason why I put my stop loss here because I'm afraid of this fair value gap that the price will try to retest this fair value gap. So I don't want to put my um, stop loss here. But put it there for a while. Put a limit here because maybe you're hoping that the optimum entry is still the price will still go there to retest that one, and then you have a one already, so you're good. So once you have this, you form another fair value gap, bears fair value gap. Now it's safe to put your stop loss there, and even safe to put it here to break even or to have some profit because you already have this fair value gap that most likely prevent the price or stop the price for going there because people this is an inactivity and sometimes people put their order there for another sale. Then like you see, have a retest, and if you are confident enough, but I'm not doing that, if especially like if you're confident, you can enter another trade here if you're confident enough. But for me, I rather I rather put my entry on the premium price for sell or discount price for buy than putting it on here. This is already on an equilibrium like that. And then you have that. Okay, exit the trade, wait for another setup. So that's the first uh, unconventional optimum entry, unlike the optimum entry that I listed down there on the what you call on my description. Now, um, now we have this move again, and then the the signal tells you to buy. Nothing's wrong for like taking this on a 15 time because you all have the criteria to enter the market. You have the cross, you have the super trend, and you have the uh, displacement, and you have the market shape, and you have a perfect fair value gap. So I will buy. I don't care because we don't know. Maybe the price will go up, so you don't know. You have the setup, and we're just scalping. You put your stop loss there. You're not risking a lot, and then aim for 1:2 or maybe aim for this uh, resistance here or liquidity here, whatever you call it, and then um, you're not risking a lot. If I'm I will try because I did this earlier and I even put my stop loss here because I'm not risking a loss and I already have 800 that time. And then you wait, and then this happens. So if this happens, we have an option to exit, right? But it haven't met yet. So it's up to you if you are right. So me, I will wait until I have that. So once I have that, and the super trend is still supporting the bull, I will still hope. Sometimes I don't follow this one, especially if I see a super trend that giving me a trending, unlike a super trend that giving me a flat, which is a sign of a consolidation. Sometimes I try to we're still hoping and we're not breaking any rules, so I'll keep for a while. And then when I see this crossing of this blue to the green line, that no matter what, I will exit the entry or exit the trade because this is another sign, like a sign that giving us to, the first sign, the number one sign, giving us to buy. And with the move like this, once I have this move and this is starting to consolidate, as you can see, it's starting to straighten. This starting to consolidate. I will be thinking that there will be a continuation setup for a sell. So you lost 100, but you already profit 800, and you are scalping. That's okay. And then wait, and then you see this. So uh, we already break this. we have a breakup structure here. We have a breakup structure, but it's still not a perfect setup because we haven't the super trend not shifted yet, and then and then this happens. So you have all the criteria right now uh, for a continuation setup. Now you are in 15 seconds. So what you can do is to wait for a fair value gap, and then you see that the fair value gap try to so wait for the fair value gap. Now you have this fair value gap here, and most likely your entry will be here, right? And always respect an extreme fair value gap. So I'll put my stop loss there. And this is a risky a risky one, and it's up to you if you use micro. But earlier I used mini here, and I think I I risk I risk I risk 800 700, almost 800. I know it's a temporary, and I'm pretty sure that it's a continuation setup. So I did that. Um, yeah, I got stopped. And then, yeah, I got stopped here. Then I have another entry. I wait this consolidation. And this is where my next entry. And I put two here earlier. And then I put my stop loss there. I think here. I think I got stopped twice here. One is an exit, like a profitable exit, and one is a stop. But I just don't remember. But yeah, yes. This is where I got stopped twice. And at 10:35, where is it? 10:35 or 10:45. I I have an entry. Let me see. Where's show it to you where's my entry? And this is where I enter, I think. And at the same scenario, uh, the same entry here. It's not a usual optimum entry. And this is where. So after I got stopped here, I think I went for break. And then I'm not planning actually to trade. And then I saw this one, and I was tempted actually. And that temptation leads me to a 10,000, almost 10,000. I think that's my entry. And I put my stop loss here. This, yeah. I did not put my stop loss there earlier because I'm risking a lot, and I'm not, actually I'm not, this is a lucky trade. I was just hoping because of the premium discount zone that I have right now. So that's why I said, okay, I'll take this one more time, risking 400. And then this is what I have. And then I hold this trade until for 3 p.m. And then I switch to 1 minute. Yeah, I hold this trade until 3 p.m. So at 11, this is where at 11 like that, I put my stop loss here around 11, and I said, okay, I'm good. I'm good. I'm break even, and I think I will keep this trade run. And the reason for that, number one, that account is not mine. it's uh, it's the 50K that I used last night, and I don't have a take profit because I said I already have 1,000. Actually, I think 1,500 I have earlier. Yeah. And I said, okay, I will keep this, and then this what happened. Yeah, I keep it run. I slept for 2 hours, and I stopped trading at around 3 p.m. I guess. Yeah. When I opened the market, like that. So I think yeah, it's where when I opened the market, it was here before, I think before 3 p.m. Uh, yeah, on the bull like that. Yeah, before here. So when I opened the market at 3 p.m., that it was 3 p.m. This one, and I saw this one like, oh my God, I have 10,000, and then I close it immediately minus my loss. So I think I have almost 10,000, I mean 9,200 for that account. And then I messaged my friend. I said, hey, I'll give you a gift, and it's up to you if you want to give me something. Yeah. All right. All right. So yeah, that's an example of optimum entry. So you will see this entry most often than not. So the reason why I'm explaining to you this is because the one that I gave you on a strategy is an optimum entry where you put your entry on the 50% of the fair value gap, and uh, price will not most of the time price will not try to retest that or fill that 50% of fair value gap. But if you want to follow that optimum entry, it's up to you, but it's not always a guaranteed. And the other reason to do that, like sometimes the price will not try to go retest the fair value gap, and the what you can do is just go down to 15 seconds so that you will have, you can have an entry. You can have an entry. So anything that will, like for example this one here. Okay, if you wait for the price to try to test this one, you will not ride, you won't be able to ride this move. And the same goes here of this of this good move here. Where's that long? This one here. You see, uh, the fair value gap. This is our fair value gap. So if you wait for the price to test this one, most likely you won't be able to ride this movement or this manipulation move or whatever, this sell out. You won't be. But the best thing you can do, once you all have, the best thing you can do is we we already have a good displacement here. You see that? And we have a fair value gap. The best thing we can do is put an entry on 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 any green candle that will try to go up. So in this case, this is the first green candle, and this is fast because this is 15 seconds. So you don't have a time to think. So that's what you do. Okay, I have this fair value gap here. You can see, you have that fair value gap there. Retest, and then there's a displacement again. And don't think, if you have that, immediately sell. Let me see. Uh, Immediately sell. Sell. Then put your stop loss here, uh, here. So let's see if this is one, because I'm risking a lot. So sell, put your stop loss there, because respect this one here, so you're risking 300. So don't wait for it. And this is applicable most of the time on a sell out or manipulation. But if you see a market like what we have on Tuesday, I'll show it to you. If you see a market on what we have on Tuesday, okay, this one here, Tuesday, see? You don't need to, so you don't need to do that. So you need just assess the market like this. This is a good example, very good example. I have a good result. This one here, opening 9:30. So you assess the market. If you see that the market is keep on retesting the fair value gap, go to 30 seconds, because you see high volume and you will not see anything like Tuesday. One example, one last example, and after that, I'm done. We're done. Where is it? Okay, 9:30. This one here, not the one. Okay, here. Where's our displacement here? Our displacement. Okay, market shift. Market shift is here, right? And this is 30 seconds. On a 15 seconds, this is a fair value gap. We have a fair value gap here, but if you use in 30 seconds, this is displacement, and then we have a real displacement here, and that's a good fair value gap. And you see, this market is a perfect market for me because it keep on retesting fair value gap, any fair value gap. You see, test it again there, again here, and again there. So if you see a market this is a retail traders, algorithmic retail traders. So you don't need to you need what you if you want to maximize your profit, use the optimum entry, which is the 50% of the fair value gap. So it's easy to detect actually, very easy. Just compare the so easy to notice. Maybe you can put it there. So it is to notice this one compared to the one we have today, and you will notice that because of the multiple, like a displacement like here. So If you see this, adjust your optimum entry to, the third candle that create uh, the display the fair value gap. So just try it. I think in order for you to master this one, you need to do a replay trading practice from time to time. So you need to practice. Look at that. We missed this one. Who you get? You have this move. Who got this move? But price did not retest the fair value gap. You see? Yep, we did not. Yeah, didn't retest the fair value gap. It's a good one. Okay, but I'm done trading now. All right, guys. So uh, that's it for now. Hi, and if you have any question, please put on the description below, description on the comment, and I will answer it. And I won't be doing live soon, like starting November 11, I guess, November 11 to until January because I have a contract to finish, 3 months contract, and after that I'll be doing full-time trading, and I think I'll have Discord, uh, and it's for free. I'll put all my videos there and teaching and some and then I will do. I have a lot of. I actually have a. I'm making a course, trading course for my two strategy. I have two strategy which is exponential moving average and this scalping average. So other one is for swing trader or long like higher time frame trader, like we're talking about 2 to 3 entry in a day. So you don't need a session there. You only what you need is, yeah, start your entry at Asia, and if you have that entry on a high time frame, you leave it there until the following day, until the end of the session. So it's like a swing trader or long term, higher time frame, and it's like you're holding a trade. And I think it's less stress if you don't want to scalp. And in terms of profitability, and almost the same as the scalping, but the winning percentage of that strategy is like 60%, 55 to 60%, and it's not bad. Maybe you will have three three wins in a week, maybe two one loss in a week, and but you'll still be it's still a good trading. But the only problem is if you are using a funded account, you cannot hold for a trading, like you cannot hold it for night, right? Because at 5 p.m. they will liquidify your trading, your entry. So that's the only downside. But if you are trading, if you are using trading forex, or if you are trading futures, which allow you to hold, overnight hold like that, then I think that strategy is good, and that's the one I'm using on my forex account. All right. Thank you so much, and I hope you like. I hope you understand what I'm trying to say here. And then today is a bad market, and I'm kind of course, I'm not happy that I lost, but I'm happy because I have a chance to show you this bad market, and I also show you I tried 3 and 3 just to try to beat the market. And of course, if it is a bad market, it is a market, and you cannot beat the market. So that's why we have this strategy, and I'm saying 90% winning rate, because if you really follow the strategy and without emotion and without us as one of the weakness, that's it's a 90% win rate, because now this is a completely lost entry starting from 9:30 to 9 p 8:30, because we have a good signal here, and most likely if I was paying attention actually, or if I did not like lost 3 times already tonight, I can I can have this. And and where will I enter if I have this earlier? Actually, this is the entry. I already saw this, but I don't want to take a trade already, because we already have the displacement here, and then everything, all of the cross is was happened here, and this is our entry. But when I check the market, we already have this one, so I said, okay, it's late already. So I was thinking of taking this one, but since I don't want to break my rules, I already it's all actually I breaks it already because I lost twice already. But and I open a combine just to give you an example of the bad market. And you see, this is supposed to be the entry, and you're not risking a lot for this one. And if you are scaling using the exit one or option B, and that's your exit there here. So you have like the I don't know how much you have if you trade this one. Let's see. All right. I think that's it. That's it for now. Then before I close this uh, live live session, I will give you a prediction because last night I gave you a prediction that the price will try to hit. Uh, I told you like the mark will try to hit. I'll try to grab 20,350, and I was right, but I was wrong at the same time because the price like go deeper than that. Now I'll give you maybe an idea. Okay, we start here. This is our yesterday. Today's opening 3 a.m. Market today 8 a.m. Open here. Open here. This is where we open. This is where we switch on a 15 minutes time frame. This is where we switch trend. Okay, we are still we are now on a premium zone, but I am really thinking that the price will correct. So most likely tonight and later at around 9:30 p.m. I'm expecting the price will be here at this level. You know, we are playing. This is the week. Today's not today's level. I promise you. Today's this week market until Friday, we will keep on going back to this level, this 20,500. We are keep on doing that since the opening of this market last week. So this is the previous high on September 26, and then we have a sell out people, and then after that try to get that again. We pass that level again and then sell out again, and then we're playing just keep on coming back to this 20,500 and then sell out from 20,000 from the area of 20,500 to the area of we haven't met yet 20,000. 20,000 will be our lowest psychological number that most likely we will see within 2 weeks. So I am positive that market will go back there, play around there, and then we'll try to go back again until we have this maybe this month or within this month. But this is our area, this is our playground. So now I'm guessing if you are a swing trader or if you want to if you bought here or if you buy here or if you buy here right now, hold it, and I think you can take this as a take profit for tonight or for later for or maybe yeah. So this is the price that I'm looking forward to see where the price will go. So that's my prediction. Of course, that's my own analysis, and my analysis is based on a very basic principle, which is premium in discount. Uh, the basic principle of you buy low and sell high because we're talking about stock market, and this is indices, and uh, it's a combination of multiple stock markets. I stocks stock market. So yeah, so that's my opinion. But if this is a forex, another way around. Use smart money concept on forex, and it's another topic. And maybe if I do have a Discord, maybe that's I will explain it to you. But on forex, when I trade forex, I go to for just a sneak peek of a forex trading. So when I do forex, this is what I'm hunting on a 4 hour time frame. If I see this one, I will wait for the price to go to this, what you call this, order block. And once the price, so this one is money on forex terminology. Like for example, J, Euro USD. If you have this move on your Euro USD 4 hours time frame, and it does all the time, like twice a week or once a week, you will always see a move like that. If you have that move, that is institutional trade, bank trade, smart money trade. They sell out. They sell out big. People liquid. Retail traders on a forex is always lose most of the time. So they lost, and then I will wait for the price to go up like that. And what I'm doing most of the time, because my on my forex account, I will leave an order on this level and stop loss there, and I will take the opposite order block. And the opposite order block is this one here, uh, this one here. So I will sell this as an example of how I trade. It's a very basic strategy that keep me uh, having a good income like that. So that's what I do on a forex. Maybe you can do that. I don't know, because the only reason I'm not doing that on forex and I'm not using that strategy, which is really good strategy, is because we're not allowed to hold a trade on a futures, which I hate. I hope they allowed us to hold a trade, but in top on this top step, they will liquidify your trade at exactly 4:10 p.m. So this is what I do. I'll put my order there, and then I will close my account, leave it there, and I will wait for the notification for you get stop, or you have your take profit. And that sometimes took me like a week, sometimes 2 weeks. So sometimes I have two take profit or three take profits in a month and one stop loss. I don't care, but I'm trading big on a forex, so that's what I do. So um, you, I don't know how what you call it. It's a swing trader, but on a swing trader, to answer the to answer Don question, or like he asked me if I can do like explain swing trader. So my strategy using swing trading is smart money concept. This is a smart money concept. Locate or find inefficiency candle on a 4 hour time frame, and then wait for that to wait for the price to fill that gap, that inefficiency, and once it filled, sell. And then you will expect, because this one you will expect it's always same goes with this inefficiency candle here. I'll show you order block formation, 4 hours time frame, 4 hours time frame. It's not really working well on, but it's if you go to forex, and I have a forex account. I'll go to my forex account. It's all right. I think I can open it here. Sorry, I cannot open my forex account here. I don't want to share. I have a Wanda, and I trade big on Euro USD, and in 4 hours time frame, and you see on a 4 hours time frame like that. I have one here which I traded earlier. So like that. So this one is failed. I put my entry there, but I was not mitigated. And another one here. So this one here, I trade this one. I traded this one. This order block on a 4 hour, and my entry was here. It was here. I put my stop loss there, and then I got my take profit. I think one is to I aim for 1:2, and it was a positive entry. And you see how long it is. So I saw this one on September 25, and then from September 25, 6, 7, 8, then I have my entry on September 27, so it's 2 days, and I have my take profit on October 1. So you see how long it is. So it's like you keep it there, forget about this until you have your take profit or stop loss. So that's what. And yeah, I use a smart money concept on forex trading. All right, that's all. Thank you. Thank you. Bye. Bye bye.